Yeah, so Dapo has joined us. Dapo, we're still waiting for Dapo. Please confirm you can hear me.
I can hear you clearly.
Okay. We're just waiting for more people to join. I guess Sholatoke is in Germany at the moment. Thanks for joining. So, but please confirm, Danke is thank you, right, Sholatoke? Let me see if my German is is okay. That's I think the only word the only German word I remember at the moment. Shewa Ajayi, thanks for joining. We'll start soon, just some minutes, and then I think let's just wait for more people to join. I'm trying to see. Don Wazy Papa, man, that name, man. Don Wazy Papa. Okay. I guess we just hold on for a few minutes and then we should be good to go.
Okay.
Hi. Our facilitator for last week just joined us. Hi, Barrister Christy. I'm also waving. Thanks for last week, and hopefully you'll be back soon. I guess that maybe we can start. It's just 5 minutes after 5. I guess more people will join as we progress.
Okay. Okay, can you confirm that you can hear me?
Yes, I guess. Can everyone please confirm they can hear Dapo and myself? Please confirm. Network.
Yes.
Hello. Can you please confirm? Okay. Can you please confirm you can hear Dapo and myself, especially Dapo? Okay. Yes, Dapo. I think we're all clear.
Okay.
Okay.
Okay,
so let me just give some, Dapo, just hold on. Let me just give some introduction. Good afternoon, good evening, good day, everyone. I guess we have people from all over the world. We can confirm someone from Germany. We can confirm some people from Lagos, some people from Port Harcourt. Thanks for joining. As we are known to do, we have our Instagram live sessions every Sunday about this time. So this week we'll be talking finance and SMEs, knowing fully well that it's needed for any business to run. For those who joined us last week, thank you so much. It was fun having you guys on the legal stuff regarding SMEs. So our facilitator for today, his name is Dapo Erikitola. He's a finance expert across both from the big four and then the energy industry. And if you check our page, you would have seen his profile. And he's worked in multicultural environments like Nigeria and India. Don't worry, it doesn't look Indian. Okay, over to you, Dapo.
Okay.
Please confirm you can hear me. Yeah.
Yeah, I can hear you. So good day, everyone. So we're here to discuss SMEs and finance. Yeah, the role of finance in SMEs, how SMEs should actually employ or make use of finance in their day-to-day activities and operations. Okay, so I'll just give you a brief background of what SMEs are. So can you hear me clearly?
Yes.
Okay. So according to the International Council for Small Businesses, small businesses account for about 90 or greater than 90% of all organizations, employ over 60% of the labor force, that's manpower, and account for about over 50% of GDP in most countries. However, in Nigeria, SMEs account for about 96% of all companies registered. And so an SME ideally would be a company which earns less than 100 million naira turnover and employs less than 300 people. So if you just just look around you, you would see that most of the organizations you see around you are SMEs. So it just shows how important these companies are amongst us. And then, yes, most of them are companies, but there are also some business names, there are some petty traders and all that. All of them are from all mean SMEs essentially. And they are extremely important because if you say greater than 60% of the labor force is employed by these companies, then you know how important they are. You know how important they are in eradicating poverty in a place like Nigeria. You know how important they are in the development of a middle class. So, but because in a place like Nigeria, where not everything works well, you would find out that most of these companies are not properly structured. There's no one checking them per se. So you would see that most of them are essentially one-man businesses and businesses where the owner can just wake up and fire you and then nothing happens. So now they are very important because if over 60% is employed, then if you don't have them, then you can say half of the population is out of jobs. And because of that, we think they are very important. And part of also what they try to do is that the little things that we need around us, small things like electrical works and all that are basically provided by all these companies. And then if you don't have them as well, you have to go to the big companies, and then the big companies would charge you an arm and a leg. So they're very important amongst us. So now if we go the finance way, because they are small and structured, there's not so much of financing or not so much of bookkeeping and accounting that they do. And because of that, we cannot actually tell how they fare. We don't know how they're faring. We don't know if they're making money or not. And you will see time and again, you see people jumping from one business to another. And of course, it's because they don't know what they're doing, or they don't have a records of what they are doing. So they have not been able to properly plan. They have not been able to control their businesses properly. And because of this, even for them to grow is a bit challenging, because for such businesses, money is not easy to come by. And because it's not easy, they would need to borrow. And of course, you can't borrow without any financials. So these companies actually really need a lot of accounting and bookkeeping to ensure that they play the role that they should play in the organization. So I'll just give you a list of 10 things that are known to make such businesses fail. So one is the lack of managerial skill. Of course, if you cannot manage anything, then the business is as good as dead. If you're there, if you're in the business and you sell, yes, you think you're selling, but are you making money? Are you making profit? You don't know, because you are not keeping any records. Then wrong business decisions. Of course, if you do not have financials, if you do not have any records, if you do not have something which shows you the health of the company and which shows what part of the company is making money or not, then chances are that you will take a decision on perceived realities instead of actually what is happening. So that brings to that also shows that financials are very important. Then you have the harsh policies of the government. Yeah, there isn't so much that we can do about that. Though planning would help us, edge some of those risks if we pay attention to it. Then we have the inability to move with the trend because these companies are small, especially when there are technological advancements. Then it's hard for them. It's hard for them to follow the trend. So, but that time, by the time they are able to afford it, they're probably out of business anyway. So there's no point. And then there's competition. So in Nigeria, what I've noticed is that people don't go into business to solve any problems or to provide any service per se. They go into business because their neighbor is in the business and is making money, or they think he's making money. And then they think, there's a lot of money in that business. I think I should do it. So they just go in there. And then, of course, if other companies come into that space, you reduce the market. You make things a little harder for every other person in there. And then, of course, if you don't know what you're doing, you're out of business. If you're not there because you want to be there, if you're there because you perceive that there's some gains in there, then chances are that you lose the patience to continue to do the business when it's tough. Then there's a lack of knowledge and experience in chosen field, exactly what I just explained. So if you don't have the knowledge, if I do something because Tunji is doing it and I don't know what it is about, just because I see Tunji driving new cars and all that, I'd probably go in there without without knowing what it is about. And then yeah, so he drives a new car, by the way. Okay, so then there's bad debt. So there's bad debt, and of course bad debt is when you sell to people and they're owing you and they don't pay back and they never pay back. You write it off, and then that way you're getting rid of capital in your company, and then you're driving the company into bankruptcy. So bad debt is really bad, and unfortunately, if you do not have financials and if you do not do all the things that you should do with your accounting books, then bad debts will definitely come. Because if you had your books and then you had checked your current ratios, for instance, if you had a trend of that, you would know when things are getting bad, and you would know from experience how much credit days to give to your customers. That would help you to avoid all these bad debts. And another one is insufficient capital, which is the problem of almost every one of them. Then there's the fraud, which you have in the businesses. So and we know these things. It's hard for Nigerians to invest in businesses without being there, because those you think you are helping by putting in employment are just getting everything into their bellies, and then you end up losing your company. They're there morning to night. You're probably doing something else, and then at the end of the day, they've used your company to set up a company for themselves while you have none. So we have that, and that's a very big issue. I was in a conversation with someone last weekend, and after sinking so much into a farm that they have and getting a lot of specialized equipment, tractors and all that, manpower is not reducing. Why? How many people are driving the tractors? So you have all those kind of things coming up, and then it happens everywhere. It happens in all of the companies. They all steal. So that's a very big issue as well. So I'll just move forward and explain why organizations should maintain their books of accounts. And despite or in spite of the importance, you still find that most don't. So you go to a business center, for instance, and then they print letters for you, photocopies and all that. When you're done, when you pay, nobody makes a record. Nobody writes anything down. It just goes like that. And then at the end of the day, they pay rent, they pay staff, and then they maybe service the photocopiers and they buy cartridges for the printers and all that. And the owner is complaining, what have I used money for? I can't find money. This business is not profitable. But all this you would know, or you would know how profitable your business is by the time you've done it for a few months to a year, if you keep adequate records. So records are very important, and you have the regulatory bit of it, where, for instance, the Corporate Affairs Commission would require that you file returns. The FIRS will require that you file returns. The FIRS wants to see your returns and tax you. So if you don't have that to give to the FIRS, you're violating the law, because you are not doing what the country wants. One. Secondly, you are evading taxes, because there's no loophole in the tax law that says you shouldn't file your accounts. So because of all this, you find that the regulatory bit is very important. And if you check the news, you will see that there are times when FIRS would go seal up companies, and then if that is done, you have people back in the labor market. People don't earn as much as they should earn anymore. People do not. People cannot feed their families. You have poverty coming back. You have unemployment because one person has decided not to file his returns. So that's the regulatory bit to it, and that's actually one of the most important bits, because tax evasion would usually lead you to go into jail. So maybe not in Nigeria, but of course that's what is expected when you evade taxes. So that's something that we should try to do, at least for the taxes. And you also know that keeping records, for instance, I'm not exactly sure of the law, but I know there are a few laws which say if you have up to a certain number of staff, you need to have some form of retirement savings accounts for them. You need to have you need to pay their taxes, of course. I'm not sure.
Yeah.
I don't think we have that.
That's the pension. I think the Pencom Act says you must have a minimum of, I think, 3 staff. Once you have 3 staff or more, you're eligible to do those deductions. I think it used to be 5. I think it was reduced to 3.
Oh, okay. Thanks. And then I know in the US, if you have up to a certain number of staff as well, then I think they're entitled to medicals. Those little things. So if you don't keep your records properly, that means you don't have any records of how much you pay your staff. How do you know how much you need to remit for all of this? You don't. And then you're making someone's life worse than it already is, because he doesn't have medicals. What if he falls ill at any point? So there are little things like that come with not doing it. And then all these are regulatory, so you could actually get in trouble with the law. Secondly, it helps for better financial management. If you prepare your accounts and you have all the necessary segmental or sectoral analysis that you need to do, you would know what part of your business is bringing in the money and what part of the business is consuming it. Because in most organizations, you find out that there's a cash cow. There's a business where you put little or nothing, which generates more of the revenues, than one where you sink in everything and then you lose. You actually keep losing in that. So if you do proper books of accounts, you will be able to find this out, and you will be able to take an informed decision if you want to divest or not. Then you have planning. If you don't have proper accounts and you cannot say this is where I'm making money or not, then you cannot plan, because you do not know where to sink in your money. You just probably off the top of your head think, oh, okay, let me just give 20% here, 30% here. You don't know that where you're putting 20%, you should actually be putting more like 60 to generate all the money that you need. So that is key. Will help you to plan. That will help your budgeting. And even after that is done, you still need to prepare these accounts to be able to compare with your plan. How did we do compared to what we said we will do? How did we do compared to where we were yesterday? Are we overstaffed at this point? Are we over trading? Do we need more money, or do we need to rejig the product mix, or is there something we need to do so that we can generate more money? If you do not have these accounts done, all of these things will not show to you. You would not see it. Everything will just be off the top of your head because the numbers don't lie. If you cannot do all the ratios that you need to do to see what is going on, then you're just guessing. You're just picking at straws, you know. And then also you talk about for a small scale business fixing prices. So being a shop owner, I probably would buy a laptop for say 120,000, and by the time I've sold for 130,000 or 125, 5K, well, that's good, yes. But now these accounts are what help you to fix your prices, because by the time I talk about the transportation cost of going to buy this thing, I pay rent for my shop. I pay an aboki overnight to secure and guard the place, and then I go and sell for 5K, for 5K profit. It just might not be enough, because by the time it's from the 5K, so really, if I sell it, quite a number. So it's from the 5,000 naira that I earn on each that I will take out their own proportion to the their own contribution to the rent, to the security, and all that. 5,000 may not be enough, right? But you would never know if you do not do your accounts and your segmental analysis, for instance. You would never know that. You would never know what markup you need to put on it. You would, if you do not do the accounts properly, you would not know if at some point you should give discounts, if you can afford the discounts to even get more customers. You would know all of this. So accounts, like I said, extremely important. You need them compulsorily to be able to move forward with your business. Then I have profit determination as well, very closely related to what I just said. That is, so if I have, I pay my rent, I pay for my security, I pay my employees, and then I have a particular profit that I want to earn. So when I put in my profit, that goes back to determine how much I want to sell this item, right? So it also helps, because looking at it that way will also tell you that, oh, if you want to make 10,000 naira and you can't, ideally this is what price you should charge, but this price is not reasonable, because if you charge this, then you would lose customers. Then that way you would know that your profit ambitions are not aligned to what the business can generate for you. Then these books as well, because most of these organizations don't have money and need money, they get to a point where they may have very good business models, and it's time to take the leap to join the bigger companies, and you cannot. Why? You don't have money. Oh, okay, yeah, your business model is fantastic, so go and borrow. And then you go out there, and then somebody says, oh, can I see your 5-year financials? And you're like, what? Okay, I'll bring my exercise book. And then they see the exercise book and say, oh, God, what is
The onward exercise book.
Yeah. So that doesn't help you in any way. And then going back 5 years to prepare accounts, of course, you know that is nonsense in there. Half of it is nonsense. It's just something that, oh, okay, I sold this to this person this time, I sold this to that person that time. You don't have that. So extremely important, again, if you want to borrow, because they will use that to check your performance and see if you can borrow. And then if you do not have that, you cannot even have a proper forecast based on historicals. I say I'm just going to prepare a forecast from scratch, and that would be difficult, because you would need to be able to compare with other companies. That might be very difficult to do. So you ideally need a forecast based on your historicals. And if you do not get that, nobody will also lend you money, because they want to see how much you'll make. They want to see what your business model would generate for you in the next 1 year, 2 years, 3 years, at least 5 years, they would ask. And like I said, if there's no historical, what are you building on? What because for instance, if you had your historicals and you know that your sales was say 1 million naira the previous year, and you probably bought a few more machines or something, or yeah, so you bought a few more machines and then you can get some more raw materials and then you can increase production. Yes, we know that you can do that. But if you do not have any financials, we will not know how much more you're making, because these these additional raw materials, this additional machinery would you would incur maintenance on them. You would need to finish these raw materials. If you do not know what you have been doing before, how do you objectively tell somebody, how do you convince someone that this is how much I'm going to make on this? It just doesn't make sense. And nobody will listen to you and say, I know this business, this is what I've always done. No, it doesn't go. It doesn't go with them. They need to see it on paper. So it's extremely important, very important, that you have these financials for all this. Then your investors, yeah. So your investors actually bring most of the money that you use for your business. And if your investors do not see what you're doing with their money, then they want their money back. And chances are that because you do not have adequate records, the money is nowhere. So you need to have these financials for them. They need to see what you are doing with their money. They need to see that you are making money, because they too will do this sectoral analysis and say that this place where you're putting money is not ideal. Can you please move money to this point where we generate a lot more? So because of that, you need this as well. And so for a one-man business, you know, you might think, oh, why do I need to incur so much to generate so little? Yeah, I understand that, but unfortunately, if you want to grow, then you need it. Otherwise, you're not going to grow. You're just going to keep writing in an onward exercise book. And chances are that your sales, your staff will probably burn it one day that they have stolen your money, you know? Yeah, so that won't work. And then, so what you really need is financials for cannot be overemphasized. You need them. For instance, you need ratios done. If you do not have financials, how do you compute your ratios? How do you see your profitabilities? How do you see your liquidity? How do you see if you have enough capital in the business? You will not be able to do all this. So you need that. And then when you sell, of course, you need to issue receipts. You need to keep your receipts properly. You need to have a bank account as much as you can. You need to have a bank account, because if most of your expenses going through your bank account, then it might be easy to actually walk back and see how much you have made. And something with most of these companies as well is the cash basis of accounting. So it's just cash. I've collected cash. This person has paid me. You write it down. There's money in the business. But no, it should be accrual. You should be able to say, this cash that I've received is because of what I sold last week. It's because of what I sold last year. So you can properly attribute the results of a particular period to that period. So that way, if you have sold something on credit, you have your receivables and know that this is receivables that relate to a particular period. And the problem with this is that you are not able to compute your profit. And profit is very, very important. Most will argue it's not as important as cash, but it is very important to have profits in your business, because it's from your profit that you know that you are growing. Cash is important, yes, but it's your profit that grows you, because it's your profit that grows your reserves, that grows your asset base and all that. So you need to be able to properly account for this to know if you are growing as a business. Then so as part of this, you know that receivables are assets. So you need to be able to document all your assets. I bought a printer, for instance, and then I have it in my books. I need to depreciate it, because truth is that in 5 years, I'll probably spend maybe 150% of my current maintenance cost to maintain this photocopier. And who knows, I might not be able to grow my charge per page, when I'm printing or when I'm making a photocopy. Yeah, so very important to keep this so that you can properly attribute the cost of that asset to the period in which it's generating the money. So if it's for instance, if it's depreciation in the oil and gas industry, and then you're pulling out hydrocarbons, you will depreciate on unit of production basis. So the more you produce, the more the depreciation. But if I am not depreciating any of these assets, I just carry the cost in my books. My assets are fictitious. My assets are overstated, and then I have a bloated balance sheet when that's actually not the case. So very important to keep records of the assets. Extremely important. Then your liabilities as well, because you would have suppliers supply to you, and you will owe them most times. Because of course it's good to owe sometimes, make sure you can use somebody else's money to run your business. But of course, it's the same way people owe you when you sell to them, because when you sell your finished goods, it's probably input into somebody else's process, and it will owe you. So that's the working capital that drives the business, really. So you need to ensure that these liabilities are properly accounted for, because you have cash in the bank. You think you have money. You think you have ₦1 million in the bank, but you have your liabilities of 900,000 waiting for you, and they fall due within the next, say, 2 months. It's wrong for you to say that, oh, I have all this money. No, you don't, because your liabilities will crystallize in a month, and you would need to pay. And once you pay, you have 100,000 left. And because of this, you would need to manage your receivables properly, because you should ideally receive your receivables, your cash inflow, before you pay. So you want to make sure that you get your money in quickly so that you can pay those that you need to pay quickly as well, because all these have implications. If you do not pay them, they are not willing to give you raw materials the next time. If they are willing to give you raw materials the next time, they'll charge you more, because they'll probably build a cost of capital into it. So that's very important as well. Then
Dapo, just hold a minute. I don't know, maybe in like a minute or more, let's start taking the questions, so that, because we have a couple of questions waiting for you.
Really? Okay. Yeah. So matching principle, essentially, that's what I'm saying. Trying to match your revenues and your assets, revenues and costs. Part of this cost is allocating your asset cost into the particular period in which it has generated revenue for you. So matching principle, very important. And the double entry. In accounting, for every debit, there's a credit. So if you're spending money on rent, then rent is receiving, cash is paying. So this is also very important, because at any point in time, you can drop your financials. It doesn't have to be at the end of a period. You can do it within the month to see the current state of where you are. And then you can also, you also need a cash flow statement, because that will help you to properly plan yourself, plan your cash outflow and your inflows. Know when you need money, know when there will be a shortfall, know when you would need an overdraft. All this, if you know and you can negotiate early, you would be able to bring some of your costs down, your interest expenses and all that. You will be able to plan properly for it. You would know when to ask for more money from people or from your investors. Yeah. So 1 minute.
Okay, I guess maybe we'll take other parts, but let me just start with the questions. The first question is, when it comes to finances, as a business just starting out, is it advisable to get seed capital from outside? That is not friends and family. As a business just starting out, is it advisable to get seed capital from outside that is not friends and family?
Truth is, if you are sure that your business model is fantastic, which we can't really tell until we actually check it, right? If you're sure, then of course you can borrow, but you never know until you actually have your financials to check it. If I am very sure of my business model, I will take it. I will take seed capital, but it's very important to make these people know that this is a business starting up, and then, of course, you can't expect to start earning this early. The first few years or months, you would probably be running at a loss. So
Uh-huh.
you need to make some of these things really, really clear from the start. Seed capital, yeah, I probably will go for it. Yeah, so let's share the risk. Yes, and then yeah, so I would advise it if you are very sure of your model, but if not, better to tread carefully.
Okay, and just to add to that, I think it's also good, like Dapo said, treading carefully. Sometimes it's better to get it from friends and family, because if you go out there, the pressure on you will be more. And like he also said, when the business model has not been proven, then it's more challenging for you. I think another question, how do you eliminate bad debts? I'm a photographer and I've heard stories of jobs done by colleagues and you never get your money. How do you eliminate bad debt? Is it a job kind of setting or you get EFCC or AMCON?
Okay, so eliminating bad debt. Yeah, so there's no, I don't think there's any rule to that really. But to eliminate bad debt, you probably need to make these people, some of your customers, some of your high risk customers, you make them pay a sizable part of your fee upfront. Because yeah, well, as a photographer, I'm sure you do that already anyway. So you make us pay like 100% of what we should pay before you start. So very important. So very important. Your high risk clients, make sure they pay a sizable portion of their money early. Yeah, and I don't know if you've heard of debt factoring, which is there are organizations which you can approach that will go after your money for you. There are organizations which they just charge you a portion of the receivables. For instance, I have 1 million naira receivables. I have an organization that would charge me, I don't know, maybe 10%, 15%, and they just pay me that money up front. And it's their business if they get the money or not. It doesn't concern you anymore. You're gone with the money that they've given you. So such organizations can also be approached. They would help to keep your business afloat. Did I
Okay.
answer that question?
Thanks for Yes, I think. I guess there'll be more questions. Another question, as a one-man handwork business, is it advisable to register your business or also for a period before investing money in registration and all that comes with it? As a one-man handwork business, is it advisable to register your business or also for a period before investing money in registration and all that comes with it? More questions, please. But Dapo, you can answer, have it.
Okay,
Take
so
on
as a
that.
one-man business, I know it costs money to register, but I know that the government is also trying to make it a lot cheaper than it was. I've read a few things lately where that cost has actually really come down. So yeah, I would advise that you register your business because it protects you. Registration protects you. You know, the business once registered, a company is separate from the individual behind it. So Tunja and I can form a company, for instance, and the company, once we form the company has a life of its own. So we don't need to be here forever. I can bring my wife in, you know, and even if I'm gone, when I'm dead, the business continues. That's a life of its own. But while you're there, it protects you because now the business is the one who owes, right? That's not saying you should take money and not return it, but it's the business that owes. So it's not a business will go bankrupt before you go bankrupt, you know. So the business protects you. It protects you in a way, but that's not for bad intentions. So be careful with that. So, then can you remind me of the second part of the question?
No, I think you've answered it. For a period, investing money in registration and all that comes. I think you've answered the question. The question was, as a one-man handwork business, is it advisable to register your business or also for a period before investing money in registration and all that comes with it?
Yeah.
Okay. Another question. So are you saying basic accounting is needed as an SME owner? Because even if you hire someone, if you don't know the basic, you can still be duped. Is that what you're saying? That basic accounting is needed as an SME owner?
Yeah, basic accounting. For an SME owner, knowing basic accounting, yeah, I'm sure you know how you keep your money. Off the top of your head, you know the differences that you've lent money. So these are your receivables, right? So in basic accounting comes with everyday life, really. Because yeah, you are coming from work, you need to buy something, you're checking do I have enough money to buy it. And then you're planning, my soap is gonna finish in 2 days. You need to start setting aside money. You need to set aside money to buy fuel in your car next week or to maintain the car. So yes, you already do most of this basic accounting, but you're just not doing it in a structured way. So really, you know it already. It's just put more structure into it. If you have an accountant do that for you, I know of some people who will do this for you. They don't need to work with you. They just come from outside, know what you're doing, know what you're buying, what you're selling. You give them the details, and then they prepare the accounts for you. You have already agreed a fee with them. There's nothing in need for them to dupe you or to prepare wrong accounts for you. So they would probably be, they will even be trying to promote you instead of bringing you down. So those people are people maybe you can use. They would help to bring these things together. And really, there's nothing they're going to gain in not doing it properly for you. They don't have anything to gain, so they will do it for you.
Okay. Another question I think is related to an earlier question. What's the best way to manage receivables? Receivables are part of bad debt, but they're linked to the bad debt question. But I think it's just ordinary receivables rather than bad debts, I guess.
Yeah.
Let's keep the questions coming, please.
If we do not manage receivables properly, then we have bad debt. Yeah, that's where it ends. And then bad debt is a loss to the business, and a business, that pulls the business down. You have profit driving the business up, growing the business. Bad debt is pulling it down, right? Because you are making money, but you don't have cash because these people are not paying up. So yeah, so to manage your receivables, like I said earlier, if you know the kind of customers that you deal with, if for instance the kind of business that you do is one in which you work, and then you can stop at any point and go back. If you have high risk clients, that's probably something you might want to try with them. When they pay you, you continue to do their work, and then you give them notice that I'm going to need more money at this point. Those people, if from prior experiences, you know that they may not pay you, it's safe at that point to limit the risks by holding on a bit at that point. So if you can do that, and then like I said, there's debt factoring. If you sell, you don't need to care about the receivables. Just get an organization that will pay you and take up your receivables and go fight for the money. You can look for your own AMCON,
I actually think some banks do that, but for micro and SMEs, I think we'll get back to everyone on the kind of companies that do that. But I know banks sometimes do debt factoring. I think some more comments. Payment policies, don't compromise. That was a good advice that we shouldn't. Once you have like maybe payment policy, when you owe someone, let's say you're going to pay in 30, 45 days, it's good to always honor that because that's integrity. I think our lawyer also talked about when you talked about around the CAC and registration. There's a window period for, I think, reduced charges. Please confirm, Barrister Christie. The window period is from October to December 2018. So for everyone on the call, I think there's a window right now for you to have some concessions on business registration between October and December 2018 in Nigeria. Okay, T. Adiroba advised that it's important to register your business because you never know when you need to borrow from the bank. And also, if there is a major contract, an investor will be at ease if it's registered. This is very key. You can't make bids for some companies and even government if you are not a registered company or you don't even have your tax returns. So if you want to play on the small stage, maybe not. But if you really want to grow and play on the big stage and get government contracts or contracts for supplies for big companies, you need to register. Okay, please, the question, what do we do about the too many charges in Lagos State for shop owners? There's LASA, local government, tax, NEPA bill. Are you sure that, Paul, you can answer that? I leave that
Yeah.
to you.
Hey, Joe, just get your PVC. I mean, what I want to talk. No, so well, those are their government charges. There's nothing you can do about them. The only way you can avoid them is not to be in business. That's the only way you can avoid them. There's nothing you can do about them. You need to pay. Sadly, yes, you need to pay.
Yeah, and I
And
think
then,
just to add to that, okay, continue that.
yeah, no, go on, because what I was going to say is relating to one question I answered earlier. I just wanted to add something to it.
Okay. On this, I think, like Dapo said, sometimes this is why everyone, as an entrepreneur, it's always good for you to be involved in governance, get your PVC, and know what's happening in your environment. If you're involved in governance and you partake, then you can influence some of these things, no matter how little. You can influence some of these fees, the charges, the NEPA bill, the taxes. It's a case of either once equity must come to equity with clean hands. So it's always good for each and every one of us to be good citizens. So comments, okay, make charges, still on the charges. So Dapo, back to you. I don't know,
Yes, I
more
was going to
questions,
add.
comments, feedback.
I was going to add something to managing your receivables. So you can use discounts, right? So you can give discounts for people to buy some more. You can also give discounts. That's a price discount. So you can give a price discount so people buy a little more. Oh, it's cheaper now. And then, there's some mentality where if I put if I have something for sale and I say, oh, it's 1,000 naira, people will say, oh, it's too expensive. But if I put it at 2,000 naira and I say 50% off, then people will rush it, So discounts are very important. And then you need your cash discount. So if you have a receivable, tell whoever is owing you, if you pay within a month, for instance, you get 5% off. If you pay within 45 days, your discount drops to 3.5%. If you pay within 60 days, no discount. Most rational people would want to earn some more, right? And so they pay earlier. So you can use that to manage your receivables as well.
Yeah, thank you for that, Dapo. I think we've exhausted all questions. I don't know if there are comments, more questions. We have some few minutes left. So I guess Dapo, maybe if there's something you've missed out. But just to make a summary, I think Dapo has emphasized the need for record keeping, which is I think the fundamental and most basic, as it helps with business decision. It helps with planning. It helps with also tax planning, forecasting. There's a need to register your business. Issues around seed capital has to do with be careful how you take capital from both internal and external sources. What else? I think he also talked around the accrual/cash basis, the need to always recognize income and cost from an accrual rather than cash basis. He also talked about receivables and bad debts. I think how to manage receivables, giving discounts for bad debts, probably getting some debt factoring or a finance house to help with collecting the debt while you run your business. I don't know if there are any more tips you have for us, Dapo, before we round up.
Okay, so there isn't much more. It's just to say that if you're going to grow as a business owner, then you need to do the right things. If you're going to make money, you're going to be a major player, then there are certain things you need to do. You know, the big companies, people are always waiting for their results. Oh, how are these companies doing? That's the only way you would know how you're doing. If you do not keep these results, you would not know. If you do not have these ratios, computing how much you are earning per naira that you have spent, you don't know these things. If you do not have your ratios or your profit and loss accounts, you do not know at what point you have started to lose money. You do not know when your profit is going down, because all of these things have an impact on the bottom line. Bottom line here being profit. Everything that you do has an impact on your bottom line. No matter how small you think it looks, giving your staff a 1,000 naira tip on a Saturday has a 1,000 naira impact on your bottom line. So every single thing counts. So it's very important that you keep your records. It's extremely important that they are properly filed, and for you to actually get more money, for you to get loans and more capital, you need to show how you have used the money that you had before, and you can only show this money with the financials that you prepare. You can only show it. And cash, very important. Like I said earlier, profit is key, yeah, but cash also is very important, because you can make all the money, but by the time you cannot pay your suppliers, they stop supplying you. If they stop supplying you, you cannot process your
You
raw
stop making money.
materials. That's the bottom line. If you don't have raw materials, there's nothing to process, there's nothing to sell. You're out of business. So cash is just as important. But you shouldn't bring cash. You shouldn't just have cash and also not earn profit. You should earn profit. That's what business is about. You should earn profit. Otherwise, you're also as good as gone. Only thing is that this time, maybe when you're going out of business, there's some more cash with you. That's the only thing. But you're as good as gone without cash, without profit. Yeah. Thank you.
Okay. Thank you very much, Dapo. Clapping for you from here. Thank you so much. Okay, and just to for more questions, please send us a DM or email us at vimbai@naspire.com. Thank you so much, Dapo, and for all the questions. We'll be sharing this on our, for those who probably joined late, Lord Tyrus and a couple of people who joined us late. This IG live session will be on our profile for about 24 hours via Instagram. And then if you go to www.naspire.com, I think the video will be there from tomorrow. So you can see all the video for so many, as long as you want, if you join, sign up at naspire.com. Thank you very much, everyone. Bye.
Thank you.